Hi, I'm Steve Dudash at IHT Wealth Management. Welcome to this week's Wealthcast. Excuse the voice. I had our holiday party a couple days ago, and then I had another holiday party yesterday, and I feel like I've had two parties this week. So I apologize. But this is important. I want to focus on the tax law changes, seeing that it's now official as of today, and we only have 1 week, thank you government, to prep for all the changes in the 500-page document that they changed. Anyways, but here's the two things. I want us to focus on two things that are important to everyone watching this video. And I got to say the little disclosure part right now, I'm not a CPA. Everyone's situation is different. No way could I take 500 pages and really cram it into 2 minutes. But what I can do is give you a couple generalizations that may or may not fit to your situation that you should at least be exploring. Yes, everyone's different. I get it. This is just big picture stuff. But two important things. One, you should probably strongly recommend examining should you be prepaying your real estate taxes, okay? Every state's different, every county's different. Some you can prepay, some you can't. Some you only can prepay a part of, like Chicago. I can only prepay half of my real estate taxes, whatever. But take a look at yours. There's a cap now in general of $10,000 for state, local, and real estate tax deductions, okay? But if you pay your real estate for next year in December or in the next week, you could, again, generally get the full deduction on it. So please take 5 minutes, examine that, call your CPA. Does it make sense for you to be prepaying your real estate taxes? In a lot of situations, it makes sense to do that. The second one, this one's a little hairier, but same concept. You may want to pay what state taxes you owe next year now. So again, I'm not talking about prepaying 2018 stuff. You're paying for what you are going to owe for 2017 when you do your taxes, but you're doing it in the calendar year of 2017. If you owe, just in general, $5,000 of state taxes, and you pay it in December, you are likely to get the full deduction on it. If you pay it in January, 30 days later, you then have to worry about, do you hit that $10,000 cap? Is it fully deductible? And a lot of other nuances. So please take a few minutes in the next week and be mindful your accountants are getting bombarded right now. So just calling them sooner than later is a good idea. You probably want to look at prepaying your real estate if you can in your city, state. And you probably are going to want to look at prepaying any state taxes that you may owe to try to avoid or minimize that $10,000 cap that's taking place next year. So please forward this to any friends or family or people that are in that situation who should be looking at this kind of stuff, because you don't want to be the guy, January 1st kicking yourself saying, I wish I would have paid it a couple days earlier and it cost me thousands of dollars because I didn't. Please, most of the stuff we talk about is big picture generalizations that you can do at any time. This is time sensitive. Please take the time to look at it. So I hope this helps. Call us, call your accountants if you have any questions or if you want us to talk to your accountants. Those celebrating Christmas over the weekend, have a happy holiday. And I'm sure we'll talk next week before the year end. And hopefully there isn't any other big changes between now and a week from now. So thanks. Have a nice weekend.